Hey guys, this is Abe, and I hope everyone had a great weekend. Sorry for the later video, but I was kind of preoccupied with the family, so I just got the chance to do this. First, we're gonna take a look here at the economic calendar. We're not looking at the ER calendar for this week. There's really nothing that's too interesting besides Micron, probably, but Bath and Beyond, just due to the hype that's around that stock, but it's nothing that's interesting or that could affect the market really. But the main thing here for this week is the sheer amount of speakers scheduled for 1 week from the Feds. Starting with Monday, we have Rosengren. He's a retired Federal Reserve president of uh, Boston's Federal Reserve. I think he retired last year. It would be nice to actually see what his take on the market. And you have Mr. speaking at 4 o'clock, which is after market close, but still, it's something to look for. Tomorrow at 7:30, we have Jay Powell actually speaking, and so that could cause a little bit of volatility before market opens. We also at 8:30 have core durable goods orders, and we also have Bullard speaking at 9:55, or scheduled to speak at 9:55. This is really important to keep these times in mind whenever you're trading because if they say the wrong thing, market could go the opposite way of your trade. So you just really need to be very careful around these times. Another thing that's also important on Tuesday to look for is we have the new home sales report comes out at 10 o'clock in the morning. Again, we're really expecting a drop here. The Feds want to see a drop in the existing home sales and the new home sales and the permits for new homes, and that's the whole reason for them actually raising the interest rate is to slow growth a little bit so that they can curb inflation. On Wednesday, we have pending home sales for month of August. Bullard is scheduled to speak at 10:10. Powell is scheduled to speak 5 minutes after. And we have Bowman speaking at 11. So there you go. I mean, there's all these guys speaking day after day after day. It's like they're chirping all day. Thursday, you have the initial jobless claims and you have the GDP as well. Those come out at 8:30 in the morning. All these times are Eastern Standard, of course. And at 9:30, we have Bullard scheduled to speak and Mr. scheduled to speak at 1 o'clock. On Friday, we have the core PCE price index, and we have Mr. scheduled to speak at 9 and Williams scheduled to speak at 9. Now, it doesn't mean that these guys are scheduled to speak and that they're just gonna change the way that the market is moving, but again, they can say some things, certain keywords that could trigger algos to go one way or another, and that could actually trigger either a sell-off or a melt-up. So you got to be very, very careful. Just real quick, we're gonna take a quick look at the at ES over here, the S&P 500. Starting with, I'm gonna take a look here at the weekly and just take a look at this week, this past week, and the week before. And we had an aggressive drop basically for the 2 weeks, a total of we went over a little bit over 12%. And so um, after such a sell-off, usually what you're going to see either cooling down for the market. So you might see like an inside week over here, or you might see a relief bounce in this area. Even if you switch on the daily over here, we can see that, we've had like an aggressive sell-off. This is considered like an imbalance area. And I'm not trying to say that they're going to come back and fill it. I'm just trying to look at the technicals over here and just say after such a strong sell-off, it's reasonable to expect that we're probably going to move back up a little bit. So one thing to note over here, if I need to switch to the SPY chart to talk about it. This is something we talked about in the group. There was this area over here of there's a gap that was over here that filled right around 365.95 area. And so we did come back, we filled this gap, and obviously we are left with a gap to the upside. Do not forget about it. I'm just going to keep this square over here just so that we can see it. Uh, This is the CPI date, actually, when the CPI data came out, and the drop that we had, we did leave a gap over here in SPY that did not get filled. So it is reasonable for us to think that at some point we're going to come back and fill it. To go back to ES, because as you guys know, we track ES, and that's how personally I trade SPY. So looking over here on a smaller time frame, maybe 15 minutes or 5 minutes, we can see that we created somewhat of a channel over here in this area, like a downtrend channel, as you guys can see it in orange. And I apologize for all the other lines if that gets confusing for you. But, these all mean something, obviously. They can present support resistance. So one of the key levels that we've had on last week was the 3745 area. As you guys can see over here, we rejected on it like about 3 times total, I would say. Even if we consider this level over here at 3725, it's still within the same zone, we can say. And so we broke below it. So what's going to be our plan for tomorrow? Simple and very straightforward. So I put this mark over here for this level of support to see if it's going to turn resistance. And also, I want you to pay attention to this purple line over here that shows this little broadening formation that we have from August 28th ongoing to until it broke below the 3830 level on September 21st. Anyways, so our level over here of resistance that we need to watch for is going to be roughly around 3720, 3725 area over here. Once we break above this white line, this is going to be like an area of caution right between here and here, between this red line and this white line. And the reason why I say that is because we can actually come up here and try to break and yet reject on this level and come back down into the same channel that we have. Uh, the other thing that we would see is that we could probably break over here and come back, break upwards of 745 area or 3750, I'm sorry, and continue upwards of 3780. That is a possibility that could happen. That would be basically it can be played as if this is target one over here, your red line, but you definitely have to be very, very careful. I mean, I personally, it's not a whole lot of points for a move, but it's possible nonetheless. And if we break above this line over here, chances are we can continue to reach this 3780 area. Now, this region over here becomes a really important area where you see that purple line over here for 2 reasons. First reason is, well, first, this is an area of consolidation over here, representing a golden box. So if we are to continue to the downside, this is an area where we would expect for the price to actually uh, touch and reject from here and continue back to the downside. So that would be, one of the possibilities that could happen. Let me go ahead and draw it again. Let's just see this one line over here. There's the second line, and finally, perhaps this third line around the 3800. And again, we can see a rejection here in this area. Even if it's not even a long term, I expect to see somewhat of a rejection over here, even to retest this 3745, 3750 region. Even if we are to continue to the upside, I think we touch this area over here, come back and retest over here. And if we reject, we might continue upwards to test this 38.35. Now to the downside, and as far as the downside goes, again, very straightforward. You have the low of, we have, what is it, 3680. I'm sorry, 3660.25. Let's just call it 3660 even. If we break below this level over here, your targets to the downside will be 3639 or 3640, whichever way you want to call it. Second target to the downside, I would say 3600 even. Even though we had it a little bit lower, I would say 3600 even. And if you guys see this white line over here that represented a resistance at some point over here, we just extended this line all the way down. And, it is a possibility that we come back and reject here. But why would we also reject here? You need to look back as far back as you can see. This is an area of interest, obviously, this 3600, with it being a whole number, first of all, 3600 even number, that could be a target, where people, you could have a bunch of buyers sitting and you can have a bunch of shorts trying to recover. So that could cause a rejection, right? As you can see over here, back in November of 2020 and in December of 2020, this area over here represented kind of a solid support where the price rejected couple of times, and we actually took off from this region. This also represented kind of like a resistance area back in September of 2020. So as you guys can see it back then, we rejected, came back down, tried again, kind of like a little bit lower, 50 points shy to it, but still rejected, came back, broke through it. And from there, this kind of a resistance, we just kept going up. And so you see here, it confirmed it being a support in both months, November and December, and it took off. So I wouldn't try to be brave and hold a short past this point if I am taking a short, assuming that tomorrow morning when we start, we actually break below this 3660 area. And I wouldn't try to brave it, even if if it seemed like it's strong. It could be like a bear trap. And that's another thing. I'm glad I mentioned it that I would like to talk about for tomorrow and perhaps on Tuesday. Honestly, I think this week will probably be full of traps, meaning you would see the market starting going one way in the morning, and the next thing you know, it's going to be flipping the other way around, just trapping shorts or trapping longs. Um, Another thing that I want to also take a look at over here, let me just go ahead and open it and I will switch to it real quick, is the market dex, delta exposure. As you guys can see from what we talked about before, every day market dex tool over here prints a candle, and the candle that we printed on Friday was a red candle, indicating that there's a possibility that we can be short or we can go red for the next trading day. However, with that being said, we take a look again at the chart and we see, okay, the entire 2 weeks that we had were bloody red, and we are kind of heavy. A normal price action would indicate something going like a staircase. Even if you are going to the downside, you go down, you move back up, you go down, you move back up. There wasn't much up. I mean, if we switch to the daily, you have one, two, well, that actually this is today, so it doesn't count. So we have one, two, three, four, one red, one green candle here, and before that, one, two, this was like an inside candle, so it doesn't really count for much. And you had that CPI huge red candle, which created that gap on SPY on the daily. And so definitely, definitely one of the things that I want you to be careful with tomorrow. I honestly would feel a lot more comfortable tomorrow if I see the market break into the upside, taking a long position, than I would feel taking a short position with this break over here. Because again, this could present a very sketchy trap. The other thing also that it's worth noting over here, this level over here of 36.39 would represent a double bottom from June 16th and 17th of 2022. So as you guys can see, I put a line over here on there because we can actually try to come back here, like break this level 36.58 or 36.60, let's just call it even, um, and try to touch this area over here, maybe even break just a tad below it, and the next thing you know, market price rips. So you kind of have to be prepared for these situations. How do you prepare for these situations when you're trading SPY? By securing your profits quickly. Meaning, you enter a trade, you get into profit 10, 15%. Don't wait until the target. In these cases, I would just secure my profit and move on. If you normally trade five, six positions, like six contracts in a position, or even four contracts in a position, drop to one tomorrow or two max. Just like cut down on the size of the trade that you're trading. This is kind of important because again, if we want to go back in time, and I don't want to say history repeat itself, but if it doesn't, at least it rhymes, right? You remember back here in June when we have these huge drops that we had, we reached this area over here. We kind of, went back up, pushed back down, made it look like they were gonna, you know, continue short, and from there we ripped. And for the next 10 days or so, we just had a really nice rally to the upside. And you know, historically, yes, September is a bearish day, is a bearish month, I mean, but that doesn't mean if it is a bearish month, if you're looking at the month candle or the monthly candle, that does you already have a red candle over here. You know, if we move back up to this level, that doesn't mean it's not. It's still gonna close red. I mean, ES would have to actually move upwards of 39.50 before month end, or 39.61 as a matter of fact, for it to close green or so. I mean, I wouldn't, just because you have that in your mind does not mean like, oh, well, it's a bearish month, we're just going to keep going down. I'm neither bearish nor bullish, I would say, but my lean, I want to say for tomorrow is that we probably break above this resistance over here, and we probably continue to try to touch this area up here, upwards of 3,800. Maybe it happens, maybe it doesn't. If it doesn't happen, you are ready. We know that this is my level to the downside, or you can actually try to see here, if there is a rejection, you see solid confirmation for a rejection in this region around 37.25 or so, and you reject and you come back and probably break below the 3,700 again, and even 36.80, I would say, to be even more safe, assuming the price stays in this region overnight. Then you would say, okay, well, there's a low over here. If we break below it, then my first target is going to be this red line over here. White line would be around 36.40 or so as my second target. One thing I also want to share over here, taking a look at VIX. While I'm looking for VIX over here, I just want to say, normally that whenever retail, once retail goes and turn all bearish, for example, the market starts moving up and the other way around. And actually, this Friday and Thursday, I want to say, from some of the tweets that I've seen, I'm not sure all of their sources, but they were saying that, the amount of puts bought by retails or open to buy, uh, buy to open, I'm sorry, by retail was the highest. And so I mean, it would make for a case for the market to try to bounce. So I shared this drawing over here or this chart for VIX on the group previously, and I said, hey, please take a look at this. There is a possibility that we probably have a triangle over here that we consolidate within for VIX. And not that I always believe that VIX goes with technical analysis. However, on the larger scheme of things, I guess you can try to probably draw some lines of support and resistance over here. As you guys can see, this line of support almost respected three times, even though it went down a little bit here. Well, it's not a little bit, it's a lot actually, but for VIX, that's quite a bit. But still came back here, rejected. We went back above here and continued, respected it again over here and here in this area, and we moved back up here, and you see the rejection up towards this resistance over here. So it would make for my case if we go to the upside for this to come, for VIX to come back over here, probably retrace and try to kind of consolidate within this region over here before we have the next move to the upside or to the downside. Assuming if we end up having a Santa's rally or whatnot, you probably would see it probably dropping down here, filling this gap area all the way, maybe going towards 21 or 20. And if that doesn't happen and something happens in the market, um, probably see it breaking up, and then you would have this major resistance area at around 35. To take a look at the US dollar index, DXY, this is one of the things that we look at here in our group, just so that, you know, kind of helps. sometimes I would just say, when the US dollar is very strong and is moving up, chances are you would see equities dropping, and because investors they switch, they try to invest more money in the US dollar because they get good return on it, and especially in these times here where you see the US dollar index has been on a crazy run, and this is obviously after the latest news from the CPI, and these highs that we're in, actually, we haven't seen since 2002. So that's like a 20-year high or so. Technical analysis wise, they always say, oh, 52 weeks high or not, but 22-year-old high. This is kind of a big deal, honestly. And alternatively, you look at gold, usually gold, if you look at gold futures go move the opposite side for the most part, or should at least move the opposite side of US dollar. Again, gold is used as a hedge, it's like a safe haven. And so when the US dollar is going strong, investors sell gold, buy US dollar, and to try to move try to make more money. And times of uncertainty and whatnot, and the US dollar is not very strong, they turn around, sell the US dollar, they buy gold, and that's when you see it trying to rip. But go back on Dixie over here and we'll look at gold real quick. We have a large area of imbalance over here. And sure, actually, I want to try to go ahead and add the volume profile here on this area from here to here. It'll give me, I'm not able to actually get the volume profile on it. Okay. Yeah, I think you can't get the no volume data on it. No big deal. But anyways, this is nonetheless, this is an area of imbalance over here. This area, this large area of rip, this is an area of imbalance. So what I would expect to see before seeing higher highs, at least for a healthy price action, is that for it to start retracing back to the probably at least I would say around 111 or so, maybe even 100 below 111, maybe 110.80 or so, kind of like an area over here where it used to be a resistance turned support, kind of like a confirmation to see, okay, is this going to hold or not? If we break it, we probably will continue test 109.30 and from there probably test this 108.37 and come back and test this 107.59. This is kind of an extreme scenario, long-term future, I guess, if that happens. But at least for now, I would think you would see probably somewhat of a retracement unless something happens in the meantime. And with that, if you see it dropping down, you probably will expect S&P 500 to move back to the upside over here, and so will gold. Now, overall on ES, are we going to predict the next few months? No, we're just looking one level at a time, one day at a time. You know, this is kind of like my initial area over here of interest. Once we reach this area over here, you know, would be, it wouldn't be out of the question for me to start looking perhaps at possible shorts in this area. If we break and continue, then, this will be my key level over here at 38.35 again. If that breaks, that would have somewhat of a decent move upwards of about 65 to 70 points probably to the upside. But then again, you would have this yellow line over here that represented a resistance here a few times or a couple of times. And I would say, okay, well, this will be my next level up of interest. And so we will have the same thing as far as scenarios to the upside and to the downside. You know, SPY, again, I traded based off of ES. SPY is an ETF of the S&P 500, and so however this moves, that one moves. So you can chart SPY if you would like. Unfortunately, you wouldn't be able to capture overnight moves, overnight consolidations, and to me, I think it's important, just like here around this area over here, area of interest where we had the CPI data, they went up, actually consolidated off of this golden box that was formed overnight, and from there, boom. dropped. And unfortunately, I didn't pay attention to this consolidation area until after the fact. Otherwise, I would have took advantage of this. But I normally don't trade major economic events, so probably wouldn't have made a difference. Anyways, if you're new and this is the first time for you to watch this, please consider subscribing to the channel, and if you're interested in trading live with us in Discord, you will find the Discord description or the Discord link in the description below. And we are running a special, for you to join us to trade for a free month. There will be a coupon code that will be listed in Discord. We would love to see you there. No commitment required. If you're unhappy with what we do, you feel free to cancel at any time, but we would love to see you there. If you guys have any questions or any concerns, please feel free to reach out. Again, I'm sorry this is a shorter video, just kind of got preoccupied with the family. And I will try to drop another video during the week, just kind of like an update and see where things go. I will be also looking at energies like oil and natural gas. We trade these usually with their ETFs, UNG and UCO and USO. So, I think they'll probably be prepping for a nice move both in natural gas and on oil here in the near future. Thank you so much for watching this. And if you guys have any questions in the Discord, feel free to DM me or tag me in the chat. I'll be more than happy to help. Thanks.